Ladies and gentlemen, good day and welcome to the ZF Commercial Vehicle Control System India Limited Q2FY25 earnings conference call hosted by P&K Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing the star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Annamala Jairaj from P&K Securities. Thank you and over to you, sir.
Thanks, Steve. Good morning. Thank you for joining us today and welcome to ZF Commercial Vehicle Control Systems India Limited's call to brief you on the quarterly earnings. Today, the second quarter earnings for FY 2024-25 will be presented by the management team of ZF Commercial Vehicle Control Systems India Limited. Your host today from ZF Commercial Vehicle Control Systems India Limited are Mr. P. Kaniyappan, Managing Director, and Ms. Shweta Agarwal, CFO, and Mr. M. Lakshmi, Company Secretary. I will now hand over the call to Mr. P. Kaniyappan, who will provide further insights into the results. Over to you, sir.
Thank you, Mr. Jairaj. Good morning to all of you. I warmly welcome you all to ZF Commercial Vehicle Control Systems India Limited second quarter results for FY 2024-25. Certain forward-looking statements that we will make today are based on management, good faith expectations and beliefs concerning future developments. As you know, actual results may differ materially from these expectations as a result of many factors. ZF Commercial Vehicle Control Systems India Limited results for the quarter ending September 30, 2024 were published on November 8, 2024. They are available on the website www.zf.com under the ZF CV India Investor Relations section. We hope that you have had an opportunity to go through them. A transcript and recorded audio of this call will also be made available on the website www.zf.com under the ZF CV India Investor Relations section. I am happy to talk to you today as we give you an update about the business of the company. Economic update. I would like to start with a quick update on our operating environment, which is influenced by economic factors and the development of the commercial vehicle industry. The global economy remains resilient and is expected to maintain stable momentum over the rest of the year amidst downsides from intensifying geopolitical conflicts. In India, real gross domestic product GDP registered a growth of 6.7% in Q1 2024-25, driven by private consumption and investment. The Reserve Bank surveys indicate an improvement in consumer and business sentiment. Government expenditure has improved in Q2 2024-25, and this trend is likely to continue during the rest of the year in line with the budget estimates. Private corporate investment is gaining steam with the seasonally adjusted capacity utilization improving in Q1 2024-25 and healthy balance sheets of banks and corporates. The two major drivers of GDP are consumption and investment, which is expected to sustain the momentum observed in Q1. Consequently, the real GDP is projected to grow at 7.2% in 2024-25, with the Q2 at 7%, Q3 at 7.4%, and Q4 at 7.4%. Source: RBI's MPC, October 7th and 9th, 2024. Indian commercial vehicle industry. The commercial vehicle industry shift towards intermediate commercial vehicles continued into Q2 FY 2024-25. This trend, coupled with other factors including decreased government capex and infrastructure projects, cautious buying behavior, muted demand during the initial phase of the festive season, decline in the mining sector due to excess rainfall, adverse and increase in medium and heavy commercial vehicle inventory levels led to lower sales, thus impacting the overall overall performance. Consequent to this, commercial vehicle production above 6 ton has seen a down growth of 17.5% from 1,02,514 vehicles produced in Q2 24 versus 84,542 in Q2 25. OE sales. The company's OE sales were at INR 366.5 crores this quarter compared to INR 449.4 crores in the same period last year, a decline of 18.5%. This decrease was mainly due to reduced vehicle production and lower content per vehicle, driven by a shift in the vehicle mix towards buses and ICVs. Due to these challenging conditions and our strategic exit from some low margin products, we initially anticipated a value per vehicle of 40,000 rupees. However, we raised our value PV to 43,000 rupees through targeted product launches. These products include electronically controlled air suspension for coaches and electric buses, an increase in penetration of OptiDrive AMT by extending it to additional vehicle platforms, upgraded air processing systems for a leading OEM, and a new pressure control valve for transmission systems. An uptick in vehicle registrations in October 2024 signals a positive trend, and we are optimistic about sales growth in the coming quarters based on the following assumptions. 1. The anticipated resumption of infrastructure projects and favorable policy decisions, including the acceleration of EV bus tenders under the Prime Minister e-Drive scheme, successor to FAME. 2. Focus on new products like lift axle control system, pressure control valve for manual transmission, and penetration increase of AMP OptiDrive kit. Position as well for stronger sales performance. 3. With increased demand for buses, we are focusing on bus-specific aggregates such as door control systems and increasing the penetration of electronic stability control. 4. The company's strategic decision to focus on supplying trailer ABS kits to trailer manufacturers, enhancing trailer safety. 5. Expanding our footprint in EV aggregates, including electric compressors and electronic braking system, aligning with the evolving market trends and customer demand. 6. Proactive collaboration with original equipment manufacturers in anticipation of potential government mandates and advanced driver assistance systems ADAS, including features like advanced emergency braking and the lane departure warning systems. Aftermarket. Turning to the aftermarket segment, our performance in Q2FY 2024-25 shows a positive trend, with aftermarket revenue reaching INR 126.6 crores over 118 crores over the corresponding period in the previous financial year, representing a 4% growth. The slowdown in growth can be attributed to SU sales dropped by about 10% in Q1 and 14% drop in Q2 due to financial constraints among some state transport undertakings. Export sales were down by 33%, impacted by supply chain disruptions arising from geopolitical situation in Bangladesh and Sri Lanka. In the western region, demand for general spares declined due to excessive rainfall. Decline in the trailer segment affecting overall performance. Additionally, diesel exhaust fluid supplies were disrupted due to technical grade urea price stabilization in Q1 and the implication of BIS certification requirements to be enforced in Q2. However, we are taking proactive measures to achieve our growth objectives and implementing several strategic actions. 1. We are intensifying efforts to secure more orders for door control systems by working with the ARAI approved bus body builders and targeting additional revenues to offset the decline in traditional products. Securing advanced schedules from export markets to improve supply chain management and transition from a -33% decline to a positive growth rate. Working closely with the EV bus manufacturers to provide diagnostic software and brake components, and we aim to grow our presence in the expanding sector. Additionally, we are expanding our offerings for harvester combined machines, which will help increase the average value per vehicle. Export of goods. So in Q2 of FY 2024-25, the company achieved export sales of INR 299.4 crores, a 3% decline compared to the same quarter last year. This decrease was primarily due to a drop in our export to one of the OEMs, driven by decreased EV production in Europe. Despite these challenges, intercompany sales of other products grew by about 9.3% year-on-year, supported by the start of production for heavy-duty clutch compressors and actuators for major global OEMs. We anticipate growth in heavy-duty compressors and actuators in the coming months, which will contribute to modest overall export growth. Export of services. In Q2, the export of services grew by 25%, with a service income of INR 116 crores compared to the same period in the previous fiscal year. This growth was driven by an increase in engineering and related support activities provided to our global team. Digital business. In Q2 FY 2024-25, our digital business achieved a business income of 9.2 crores, a growth of 47% compared to the corresponding quarter in the previous financial year. This performance was driven by additional business acquisitions in connected ADAS, advanced driver assistance systems, and driver behavior monitoring systems from a major fleet operator, along with a steady increase in customer subscriptions for our existing connected services. Subscription revenue increased 53%, with active connections rising by 36% in H1 FY 2024-25. The growth was further supported by strengthened field support and targeted customer awareness initiatives. R&D and engineering. ZF CVCS India recently developed a state-of-the-art electronic stability control test track with a steering pad at our existing proving ground. This facility, certified by TUV Trainland and ARAI, positions ZF as a comprehensive end-to-end system solution provider for advanced braking and active safety systems. The new track is specifically designed to facilitate the end-to-end implementation of ESC solutions, electronic stability control solutions, accelerating their adoption in the commercial vehicle market. This addition complements our existing ABS test track and provides a controlled environment for testing the stability, agility, and handling performance of the vehicles. Our facility will support testing across a wide spectrum of vehicle types, including two-wheelers, passenger cars, light commercial vehicles, heavy commercial vehicles, and tractor trailers. This development aligns with the ZF CVCS India's strategic objectives to enhance safety and sustainability in the long run. As part of the global footprint expansion, our Ambattur facility has been designated as a center of excellence for IC engine compressor testing. This facility will serve as the global competency center for validating IC engine compressors ranging from 160cc to 704cc. The expansion will enhance our ability to cater to effectively both domestic and international projects. IT and digitalization. I would also like to share that we are accelerating the transition to data-driven solutions through several projects leveraging machine learning and deep learning to address critical business challenges. Additionally, we are building a strong team of data scientists, platform engineers, and data engineers to advance our capabilities and ensure future readiness. Light commercial vehicles. I'm also pleased to inform you that ZF CVS India will be entering the light commercial vehicle segment, LCV segment, with our product portfolio and expertise from the heavy commercial vehicle sector. Our offerings will include products such as hydraulic ABS, vacuum brake boosters, vacuum pumps, advanced driver assistance systems, and lightweight calipers. The move is anticipated to contribute around 90 million euro in annual revenues by 2030, with the double-digit profit margins over a long term. ESG. On the sustainability front, our facilities in Ambattur, Mahindra City, and Oragadam are now fully powered by nearly 100% renewable energy. This significant achievement has been made possible through a combination of on-site rooftop solar installation and group captive power supply through renewable energy sources, underscoring our firm commitment to minimizing our environmental footprint. Our new manufacturing plant in Oragadam has received the LEED Gold certification for design and construction, making it the first ZF plant worldwide to receive this recognition. Additionally, our Ambattur site has received the first prize in the CII National Energy Efficiency Competition, which further reinforces our dedication to advancing sustainability and energy efficiency in our operations. ZF CVS India in IAA 2024. ZF CVS India successfully hosted the ZF India Day at the Everson Test Track, Hanover during IAA Transportation 2024. More than 30 customer representatives from Indian OEMs, including CXOs and teams from engineering, purchasing, and marketing, participated in the event. During the day, customers could witness demonstrations and also experience ZF's latest products and advancements in e-mobility, advanced safety, and vehicle motion control technologies. The feedback from our customers was highly positive, and this event has significantly strengthened our ongoing technology discussions with the customers. Additionally, we have welcomed several Indian OEMs at our booth at IAA Hanover during 2024. We presented a range of advanced technologies and facilitated over 15 one-to-one meetings between the senior management of OEM and ZF CVS leadership. The feedback from these meetings is very encouraging and will reflect strongly in our future discussions. Awards and recognition. ZF CVS India has been honored with multiple prestigious customer awards this quarter, underscoring our leadership and commitment to innovation, safety, and customer excellence. The Tata Motors Technology and Innovation Award recognizes our pivotal role in developing advanced active safety technologies, including implementing India's first advanced driver assistance systems (ADAS) with active braking in commercial vehicles, a milestone that sets new industry standards. Ashok Leyland presented us with the Impactful Innovation Gold Award for our role as a technology partner in introducing electronic stability control for their bus range, which our team applicated and homologated in record time to meet regulatory deadlines. Additionally, Volvo Eicher Commercial Vehicles honored us with the Outstanding Contribution in Field Support Award, acknowledging our dedication to customer commitment, reliability, and service excellence. Voelectra, a leader in e-mobility, recognizes with a Quick Development Partner and Strategic Supplier Award, reflecting our partnership in providing advanced systems, including ESC, EBS, and ECAS. So EBS, electronic braking system, and ECAS, electronically controlled air suspension for their e-bus platforms. In the second quarter of FY 2024-25, ZF CVS India received notable recognition in total employee involvement engagement. The teams from our Ambattur facility won the Platinum Award in CII's Digitech Award under the categories of productivity, maintenance, and energy management. Additionally, the Ambattur site earned the Platinum Award in the CII National Six Sigma competition. Our Pune plant also achieved distinction by winning the Gold Award in the Q2FY case study competition. Our employees actively participated in external total employee involvement and related competitions, winning 5 national awards, 4 regional awards, and 8 state level awards across various categories. These accolades were earned through our commitment to excellence and participation in competitions organized by CII, ACMA, and Quality Sector Forum of India, among others. We remain dedicated to our pursuit of excellence. CSR, Corporate Social Responsibility. In Q2 of FY 2024-25, the company continued to make a meaningful impact in surrounding communities through dedicated corporate social responsibility initiatives. We installed off-grid solar power systems at 7 primary health centers in Chengalpattu, ensuring reliable, uninterrupted power for essential healthcare services. In Barabanki, Uttar Pradesh, we contributed to a more conducive learning environment by enhancing infrastructure at a government inter-college. Additionally, we provided advanced servicing and testing equipment to 2 state transport undertaking workshops, supporting improved maintenance of braking systems and contributing to safer transportation. Financial updates. For your reference, the results were made public at 15:30 hours on November 8, 2024. I hope you have had a chance to go through them. Our overall product sales in Q2 was INR 788.5 crores versus INR 890.9 crores in Q2 FY 2023-24, a growth of 11.5%. Though the market is facing headwinds in the near term, our fundamentals remain strong. It's reflected in profit before tax of INR 146.5 crores and a profit after tax of 109.1 crores in this quarter, with growth of 3.7% and 3.3% respectively. Our PBT in Q2 FY 2024-25 is 18.6% of product sales, and our EBITDA for this quarter is 22.7%, which was 19% in the same quarter of previous financial year. We continue to carefully review the environment and our performance to consider further opportunities. Thank you. We now welcome your questions and feedback.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mukesh Saraf from Avendus Spark. Please go ahead.
Yes, sir. Good morning, and thank you for the opportunity. So before the question, the export number that you mentioned, just to clarify, is it 299 crores, sir?
That's correct, Mr. Mukesh. 299.4 crores.
Okay. So just coming back to the question, sir, I think in the previous quarters you mentioned about certain new products in the export segment, especially the new compressor project, the new actuator, as well as I think, so 2 new actuators. So could you give some sense if we have started seeing revenue contribution from these new export orders that we had spoken about?
Yes, please. So in the case of compressor, as I have earlier said, originally we started only with Volvo supply of compressors to Volvo globally for the heavy-duty platforms. Then almost last 1 year now, we have been steadily increasing our supplies to the DAF group, DAF compressors. We initially started with one version, 440cc. Now we have moved to 560cc. We are expecting it to further raise to a higher capacity compressors, maybe twin cylinder with also clutch version of compressors. So we are steadily raising our position in terms of the size and the size of the compressors, and also the volume also increasing. This is for DAF. Most recently, about a month ago, about 2 months ago, we have started producing compressors for Daimler Truck globally from our Mahindra site. This is also a very high-end compressor. It's a twin-cylinder compressor with a clutch. So in terms of value, it is much higher. So this is actually in line with the evolution that we have been working and actually sharing with you all. In terms of actuators, again, the position is further strengthening. Volumes are increasing. We have added one actuator line in our Oragadam site because the current Mahindra city is full and there's no space. So now we are expanding. It will continue to expand in my view because few customers globally decided to increase our market share, to very close to 100%. At least one of them. So these 2 are the growing segments. One area we are degrowing is our air supply unit, which used to supply to the passenger car, primarily BMW type of customers. Because of their global maybe volume reduction in the side.
Sure.
But we expect that to, in our view, recover as we move forward. So right now, despite a major drop in the BMW air supply unit business, the drop is almost about 50%. We are able to recover very close to our earlier numbers through the increase in the other areas, other product lines, which we think going forward, both BMW business also will steadily recover, and compressor we see more volumes as we go forward.
Sure. So if I understand, sir, excluding the BMW air supply unit decline, the compressor and the actuator business from here on should only ramp up further because of these new orders. Is that the fair way of looking at it?
That's correct. Yeah, that's correct. Yes.
Okay, got that.
Right now we are in the ramp up phase.
Right.
And, both areas. We're also building our supply chain. Addressing certain issues in the supply chain to speed up the ramp up.
Right.
Yeah.
Got that, sir. Got that. And the second question on the domestic business, I think in the past you have mentioned that while ESC is mandatory in buses, still on the implementation side, there is still a lot of gap, in terms of the OEMs doing it or the bus bodybuilders doing it, or generally there has been some gap in the implementation. Is that now being fixed because you were working with the ministry on trying to set things right there? So how is that situation now, sir?
Actually, some improvement, but formally government has taken a stand to cover more buses from September 2025.
Okay.
So, but till then, this application is slightly increasing, but not to the full applicable volume. We are in the range of currently selling about 1,000 ESC. ESC systems, but the applicability could be at least 3-4 times of that.
Right, and so in continuation to this, any visibility on when the ESC regulations will be applicable for trucks as well? I mean, generally there is a gap of 1 to 2 years.
Yeah, not yet. Got any communication or message from the government on this.
Okay.
So I'm not in a position to give you any update on that part. But on the bus side, there is clarity that from September 2025, more buses also will get covered.
All right, sir. Got it. Thank you, sir. I'll get back in the queue.
Thank you.
Thank you. Participants who wish to ask a question to the management may press star and 1. Ladies and gentlemen, if you wish to ask a question, you may press star and 1. The next question is from the line of Lakshmi Narayan from Tanga Investments. Please go ahead.
Yeah, good morning, sir. Hope you are able to hear me. So one question, in general, so we hear a lot about challenges in Europe with respect to some of the auto OEs as well as tier 1 companies such as Bosch and ZF in terms of how things are going on. Now, I also see that ZF is planning to split into 2 or 3 companies like ZF Life Tech or something. Now, just want to understand what is the implication this has, not in particular to the ZF transaction, but in general, what is your read for the Indian auto ancillary companies, particularly to German companies such as yours? Is it an opportunity or is it it actually curtails their growth, and how or whether it actually helps them to improve export markets? Just your thoughts on how to think about this, sir.
Yeah. So the points what you said about the events globally, particularly in Europe, more so in German companies, is correct. For us, my view, this is all maybe short-term topics because it's driven by the many geopolitical problems. particularly on company. For us, it's more to do with the debt and servicing the debt at a higher interest rate, etc., which I think our leadership is addressing it. But the opportunity-wise, though it is not on a specifically related to this short-term development, but otherwise the opportunity is very much open in multiple ways because India with its cost advantage and produce and also meeting the global standards in terms of quality, if there's an opportunity. Manufacturing side, in at least in many of the product lines where we have already established here and some other area also we are looking at whether we can make India as a manufacturing hub for not only for India, for even global markets. So that continues that direction, and our success is largely driven by how we actually show that compelling value proposition to our parents. This is on the manufacturing side. So we see, for example, now we make electric compressor, e-compressor. So in that segment, for the truck segment, we are launching the lighter version. So we are trying to launch it as a global product. Some markets where it is applicable, we are seeing opportunity. Like that, certain other products we are as India also now evolving. So if you see India also the vehicle configuration, the market, everything is moving towards global. So in terms of engine power, in terms of torque, the transmissions and all those things, that scenario makes the ZF products very much relevant to Indian market, which was not the case earlier because the Indian commercial vehicles were at a very much lower, in terms of configuration, in terms of engine power, etc. Typically, recently now we have, of course, in the transmission, whatever happens is outside of the listed company, but it gives us an opportunity. We are now launching a product called transmission control valve, which I already launched to one of the customers. So the transmission needs certain controls, power assist control, etc. So it gives an opportunity. Similarly, AMT, now the market is moving more and more 9-speed and in some cases 12-speed. So this will seek support like products like AMT. So this evolution will also help the listed part of the business. The other area where we see an opportunity is in the engineering. As you see, we keep on adding our resources in India to support the global parent because India is the best cost location with the high in terms of competency, also at a high level in many areas. So it becomes easier for them to really expand those things here. So it will be an opportunity, but the opportunity is not only driven by the recent developments. Recent developments, in my view, is maybe a short time, 1 or 2 years. But otherwise, from a longer term perspective itself, we are looking at India as a center of excellence for engineering, manufacturing, etc. So that will continue.
Got it, sir. I think from exports point of view, how India will become more relevant given this particular transition.
Ellen, can you say it again? I couldn't get the full.
No, my question is that how this actually helps the exports from India. If there is a slowdown in the Europe, and how this can talk about that, it will be helpful.
Yeah. So basically, we are trying to capture the market globally in the area of compressor. Let's say 2 products: compressors and actuators. Actuators were developed in India. Compressors, of course, a global product developed in India. compressor is a global product, but manufactured in India now. So these areas, if we want to increase our market share globally, you need to supply those products at a continuously reducing cost structure. So that is where we are becoming solutions to our parent organization to position like that. One example is compressor. What we started as one customer, now we have moved to 3 customers, and we are now, that further gives us an opportunity. The scale gives us an opportunity to further improve our pricing, etc. So that's how we see, because this cost structure, because on the quality, as long as we meet the quality standards of global OEMs, and the cost is compelling, then you become an automatic manufacturing site. So that will continue to drive the growth for us. And in few product lines, that is already happening. We are looking at more areas because ZF has many more product lines than WAPCO, so more opportunities we are looking at.
Yes, thank you. And also, earlier we had, we were doing some DAP compressors also. Now we also started doing compressors for BMW car application. Now, how this thing has actually expanded in the last 2 years? Have we succeeded in developing it, and what is the kind of volume we are expecting on a steady state basis?
Yeah. So we started our, in the compressor, started business with Volvo. It was about 180,000 compressors per year to Volvo, heavy duty compressors. But then today it has come to almost 100,000 because the evolution, the vehicle configuration changes, and induction of other suppliers at a global level, etc. At the same time, we have started supplying it to DAF. DAF, we are in the range of about 5,000 compressors. Now we have come to, it will go to about 100,000. Soon we expect it to be another 100,000 compressors. But this is a higher configuration, twin cylinder. After some time we are going to go for a twin cylinder with a clutch. So the size and the complexity of the product also keep increasing. Now we are also, as I said, in the last 2 months we have started producing compressors for Daimler Truck AG, DAC, so DTAG. So this is
this Volvo you talked about is for cars or for trucks?
Trucks only. All are trucks. Heavy duty air brake compressors. And so now we are supplying it to Daimler Truck. In a small way, we started about I think it's a 3,000 number per month type of volume we'll be soon moving to, which will keep increasing. Both customers will keep increasing. So if you see in terms of sale volume, what used to be about 20 crores, we see it will become about 35 crores per month type of volume, the compressor segment itself. Though there is a reduction in the Volvo, but other customers, other businesses increasing. As such, overall is a growing segment. On the BMW, what we are supplying is it's an air supply unit. It's a small compressor and electric motor. It's an air supply unit for the ECAS. We call it ECAS, electronic control for air suspension for such high-end cars. There, because of the the slowdown of the EV vehicles globally, my assumption, but I'm not having the direct understanding of exactly why there's a reduction, but there's a reduction in the BMW solution that we used to offer, which in my view will come back, because this product is not so much only for EV, but it is for all the applications. But it's again, I understand it will start recovering. So some products it is a continuously improving mode. Some products there is a reduction, but overall we see a growth trend.
Got it. Sir, on the ESC opportunity, I think around 60% of the buses are actually it is applicable to, and there is a mix of hydraulic and pneumatic, right? So what has been the traction there in terms of the ESC?
Yeah, ESC, well, there are two parts for the ESC. One is for the air brake based ESC, pneumatic ESC we call it, then hydraulic ESC. So pneumatic ESC used to be, it's our portfolio from the beginning, and because all the air brakes are WAPCO portfolio, or now it is the ref. The electronic control system for that is applicable for certain applications of the buses. And the actual fitment, it also had a lot of challenges because they tried to exclude it for the city usage, school buses, etc. They were trying to avoid because of different interpretations. Also, whether you're building the bodybuilding, whether it's done inside or outside, so who's accountable, etc. Such confusions were there. With all that, today we are selling about 1,000 ESCs for the buses. Roughly about 4,000 buses may be produced, so we are in the range of about 1,000, so about 25% applicability is there now. This is on the pneumatic buses. But then government has understood this, and then from September 25, they are also making more vehicles applicable, which will increase the penetration. I am not in a position to say exactly how much, but then directionally it is going to increase. This is on the pneumatic. On the hydraulic, it is applicable for the category of vehicles above the below 6 ton and maybe above 3 ton type of vehicles. So we are now supplying it to few customers like Force Motor. Again, the applicability is good in some customers. And most recently, we have it has been released for Mahindra. So we see already we are supplying about 400 per month. This will go to about 700, 800 per month. So all put together, we are talking about 1,700 ESCs, which it will only continue to increase because ESC as a technology will reduce significantly the rollover accidents. More and more the market will realize the value that the technology provides, and adaptability will keep increasing. Yeah.
Got it. Sir, and last on the ESC for trucks.
I'm sorry to interrupt, sir. Mr. Lakshminarayan, can you please come back to the queue? Okay.
Yeah,
Thank you so much. The next question is from the line of Nirali Gopani from Unique PMS. Please go ahead.
Yeah, hi. Thank you for the opportunity. So if I look at our numbers, normally historically, every quarter we outperform the OE sales. I know one quarter is nothing to indicate, but can you highlight like why couldn't we outperform the OE sales in this quarter, and do you see this trend continuing?
Yeah. Thank you for the question. So basically, not only the volume came down. Normally, when the volume comes down, two things happen. One is the mix automatically comes down because then more of light duty vehicles are produced. That in our case, I said we have intermediate commercial vehicle. So the medium and heavy comes down. You can see roughly from 62% to it has come down to 54% during this period. So mix is unfavorable to us. Similarly, the bus volume and the light duty volume increases, where the content is much lower than the MHC. This is point number one. Point number two, also the trailer production also comes down. Tractor-trailer combination production also comes down. When the tractor-trailer production comes down, we miss the opportunity of the increased value because we add value to the trailer. We also add value to the tractor. you have a trailer ABS, you have got a tractor ABS. So plus you may have all the braking system for the trailer, you have the braking system for the tractor. So the percentage of trailers came down about 15% versus last year. So the third dimension is the electric buses production stopped because the government has not, in that quarter at least, they have not announced the policy and the FAME and other things, which no tenders were announced. The new government did not start the tender. So the electric buses, in which our content is quite high, also volume came down. As I said, the mining also activity stopped. Again, through multiple things. One of that is flooding in certain part of India. All that led to, the numbers were there, but then mix was completely unfavorable to us. With the result, our value per vehicle came down to 43,000. In fact, we have planned about 47 and all that, but it's 43,000. That 43,000 also would have gone to 40,000 if we had not done anything, but we did quite a few projects we launched during this time. Of course, not, some of these projects are the ECAS, and some customers we have moved from a normal air processing to advanced air processing. So those things supported us. So we are in the range of, in this quarter, about 43,000 value per vehicle. So that is the reason. Plus, few commodity type products, we are also exiting from because those things are bleeders in our now. So we want to be each part, so both customer profitability and product profitability we are now reviewing, and more and more we would like to move to more technology products. Of course, wherever we are able to reduce the cost and still maintain the margin, we would like to supply even commodity products. But then where we are not able to do, and customers are not willing to compensate, a few products like air tank, hoses, etc., which also we have decided to exit. So all these things led to this change. But see, our focus, as I said, was largely on the margin. We would like to really grow the margin. We were, I think the highest was about 17%. Now we have gone to, of course, some forex supported us. Even without forex, we were very close to 16.9% margin. So probably one of the very highest in any quarter at the percentage level. Of course, forex also was favorable to us. That almost 18.6% we delivered. So the focus more and more we are shifting to margin and try to see how we will keep improving that part.
Right. So when you say that the content per vehicle has come down to 43,000, so what could have that been, say, 3 quarters back? Like from what number have we come down to 43?
Typically, if you see, we were in the range of 45, and we also have our plan is to outperform at least 10% year on year. So we have to keep improving. So from 45, and 1 year later, at least we should be in the range of 50,000. It's because of the recent last 2-3 quarters, when the volume comes down, as I said, the volume, it's not number alone, the mix is also very much, it becomes unfavorable in such times.
Right. And sir, in your experience, how does the next few quarters, when do we see this trend changing, say, the favorable mix for us?
Okay, that it's also not very predictable, but actually we are seeing some signals already started improvement. The volume improves automatically. It indicates that the economic activity is more, and the fleet profitability, everything is improving. So people start buying. So we see a few things we already started seeing signals. One is electric bus tenders have started, and one of the customers, at least for us, they started buying our products already this month, and we see that extending into other customers soon. In the trailer segment, we are also initiating action to really increase the adoption of ABS, because ABS has to be, it's mandated. In all trailers, it should have an ABS, trailer ABS. But somehow the market was, because largely this is not so much of an organized sector. Not people are not following it. But then when we had discussion with the major trailer manufacturers, they were suggesting, because we are giving an alternate option of fitting without ABS, the customers, they chose that path. But because it's mandated one, and we as a company have a commitment to drive safety in this country, we have decided to now supply only with ABS. Largely, it will take some more time. Maybe in my view, another few months it will take for us to increase the adoption from about 25% to progressively. Ideally, we should be 100% because of the regulation. We are working on that. So trailer side, also we are trying to sell trailer EBS, which gives much more value. Today the adoption is only about 3% in the trailer, where there is no mandate, but then customers themselves see a good value there. Also the trailer numbers are also increasing. Some few signals. I'm not saying that that's a big uptick in the market, etc. But then these are all few signals. Vehicle production itself has increased from about 27,000, 28,000 to close to 32,000 we are seeing in this quarter. So these are some of the positive signals. Our view is it will only go up, because last year it was the downward movement started in October and continued till August 2024. So whereas this year the improvement starts now, though it is a very small increase, but then last month the wagon sales number is also quite decent. It's at least 3,000-4,000 better than the production number. We see the things to improve, because certain things are also based on the government's decision to discuss fund for the construction and other projects. This is also starting, which has already started, I think. So all these things indicate that things are in the positive direction.
Right. And so just one last question. If I look at the service income, that has grown very well over the last few years. So how do we see this trend going ahead?
Yeah, I would request our CFO to answer this. Yeah.
Hi, Nirali. See, the service income is a direct linkage to the number of people that we're employing and the IT infrastructure we're using for the R&D purposes. And ZF sees India as a location where the R&D services or the quality of R&D is quite competitive, equivalent to anything that they would get from a colleague anywhere in the world, and hence we see that growing steadily over the next quarters as well. So we currently have about 1,200 R&D colleagues on board in our company, and we expect to see this increasing as more and more of the R&D services are rendered from India.
Perfect. That's it. Thank you so much.
Thank you.
Thank you. The next question is from the line of Rahil Shah from Crown Capital. Please go ahead.
Hello. Can you hear me?
Yes, please.
Yes. Hi, sir. Good afternoon. Sir, so based on the current environment, the situation where you say the market is kind of facing headwinds in certain business segments, but then you also just said that you see uptick and some positive indications. So what are your growth expectations then for the next second half? So like for full year FY25, what are your expectations over FY24? And then you also mentioned you were focusing more on the margins. So what kind of margins do you think you can end the year with?
Yeah, thank you. So first question on we look at the calendar year for our numbers. So next year, Jan to December, we are planning about 7% growth in the vehicle production. And because our target is to outperform by about 10%, from a longer term perspective, I won't be able to commit for a quarter or a year, but so these are the numbers we are planning. And in terms of margin, there are multiple areas we are working, but one is, of course, we are trying to see how much we can keep addressing some of our bleeders and part level. If we are not making money, we are trying to see if we can reduce the cost of the supply chain or manufacturing and like that. Also, if there are challenges, we reach out to the customer and see if improvement. So this process is one. And per se, we are a continuous improvement culture-driven company. We are a TQM company and all that. We were the first in India to get the domain price, etc. So that fundamentally put the DNA in our system that we look for improvement everything that we do. So factory productivity is something that we continuously see how do we improve our efficiency in the system. Supply chain also same. But at the same time, at the same time, there is also pressure from the market, from the customers to pass on some reduction every year to them. With all that, at least what we are trying to do is me and with our CFO. So if you see last few quarters, we are in the range of 16%, very close to 17%. At least we will protect this level, first level. Yeah. Thank you.
And about the growth, you said, I believe, you're trying to beat the vehicle production. Did I hear it correctly? 10%?
Sorry, can you say it again? Yeah.
Hello.
Can you ask the question again? Sorry.
Yeah. So in the first question which you answered, did I hear you correctly when you said you're trying to beat the vehicle production growth rate you're expecting in the market, which is 10%?
No. So what I said was, next year we expect in our planning that next year vehicle numbers will be about 7% better than this year. Because this year, if you look at it, a steep drop versus what we originally planned. We were in the range of, I think, we thought it would be 414 vehicles, 1,000 vehicles, but it comes down to almost 390 around that now. There's a big drop. 17% drop in this quarter itself. It won't fully recover, but at least we believe next year as a full year, there will be a growth of 7%. In our planning, that's what we have taken. But then our focus always is, because market growth is not in our control, we have many new technologies, many products, which in the very advanced stage of releasing by customers. Example, advanced driver assistance systems. They're one of the top customers in India. So AMP and so many products. We want to outperform. Our standard objective is to continuously outperform the market by about 10% year on year. So that is what I said. So next year also we would like to outperform. If the market grows 7%, we outperform about 10%. That will drive our growth in the OE segment of India.
Okay. But for this year, you're not able to guide, a certain revenue growth.
Sorry?
For this year, FY25, you're not able to guide for a particular revenue growth.
This year, as I told you, we are actually not even grow. We are growing with only market. In fact, about 1% less than the market growth, which is our number. That was because of some very significant drop in the mix, unfavorable mix. The actual mix is very unfavorable. Plus, drop in the trailer production, drop in the electric vehicle production. So many things has affected us. And but in the second half, it will start. Definitely, we are seeing some signals of improvement. I am not in a position to tell you whether that we will be able to do 10%, because the exact nature of the growth, everything we have to still watch for at least 1 or 2 months to come to a conclusion. But our intent is to put all our advanced technologies and ensure that we grow 10% over the market every quarter. We have actually last 2-3 quarters we could not achieve that because of the very unfavorable mix and other things. Plus the new government and certain projects were not taking off, etc. Which in our view is a very short-term type of issue. But then we will be back to our growth path as we move forward.
Okay. So you'll try to beat the market in any quarter, but it's not clear at the moment. But however, you'll try to protect the margins at these levels. Right?
Yeah, that's our intent. Yeah.
Got it. Got it. Okay, sir. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Lakshmi Narayan from Tunga Investments. Please go ahead.
Thank you. This ESC for trucks, right? When do you think it will become mandatory?
For the which one?
ESC, sir. Electronic ESC.
ESC is mandated only for the bus. Truck, we have not got any signal or any indication from the government. I'm not in a position to really give any indication, but we are working with the government, but we have to wait and watch on this. First priority, I think, is buses. The next increase we expect by September 2025, where more buses are getting covered. Some of there where we have got some clarity was lacking, but I think that is being addressed from September 2025.
So,
truck segment, we have to wait. Yeah.
So for trucks, which is the next regulation that is going to come, which would be beneficial to us in the next 12 months or so?
Yeah. Next 12 months, we don't see any big regulation, but what we expect is next regulation is advanced driver assistance system. That is a part of that is AEBS, Advanced Emergency Braking System, and lane departure warning system, which is already the standards are actually finalized and ready with the government. In our view, this will come by 2026-27 again. Just estimate, our own estimate. But then when AEBS has to come, the basic braking system should be further improved, which includes an ESC also. And ESC is in other markets, it has been a prerequisite to put AEBS. So, but then no clear visibility or a commitment or a date has been announced yet. But these are all we are ready. We are working with the government in all these areas. The discussions are completed and the standards are ready. So a decision has to be taken.
Okay, one last question. You mentioned that you are getting into LCV segment. Now,
yes.
This is the segment which we had global product portfolio, or is something which we actually developed in India, from ground up. And you mentioned that it's almost 90 million euros per year is the potential. When do you intend to achieve that?
Yeah. So, Alan, if you see, in Sundaram itself, we had certain portfolio of products for that segment. And we were supplying vacuum boosters, vacuum boosters for Tata Sumo and Mahindra Bolero type of, applications, both in the aftermarket and the OE, and some of the customers like Swaraj Mazda, Force Motors, we are supplying it to them. And then those customers shifted to suppliers who can supply the full system, including the tandem master cylinders, hydraulic ABS, etc. In WAPCO days, we were not having those technologies because we were having only a vacuum booster. But now we have the full access to all the technologies from setup. Many things. Only the vacuum booster and the tandem master cylinder, hydraulic ABS is one part. But then we have many other things, very advanced systems, integrated we call it IBC, integrated braking control. Which incorporate all these things as a single solution. Like that, many things. So the entire range, particularly on the braking side, the entire range is available to the listed company now, because ZF has taken at the global level a decision to give this business to CVS in India. Within CVS, we would like to do it from the listed company. It's a new decision very recently, and this is a opportunity is huge because in this segment, the vehicle number is almost same as the MHCV number. Almost another 400,000 or 500,000 vehicles. So we have to see the applicability, etc. But what immediately we have few areas we have already started. One such thing is the hydraulic ESC, which we are supplying it to now Force Motors, extending it to Mahindra. I talked about, which was not the WAPCO portfolio or a CVCS portfolio, which was a fast car business, which we actually brought to India because there was a mandate, and by the time Brakes India exited from ZF, so our parent asked us to really take responsibility and then go and support the customer. So that product is being produced in Oragadam, and now we are supplying it to Force Motors, which is, as I said, extending it to Mahindra. That gives us an opportunity to take up more products. There are many other products available. So all put together, we have already started there, which can give us about 90 million euro by 2030, with about at least double-digit margin, low end of double-digit. So that's what we are saying. So it's a new area which is moving into the listed part.
Thank you, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today's conference call. I now hand the conference over to the management for their closing comments.
Yeah, I would like to thank all of you for having come and participated in this very useful discussion. So I'm sure we are able to clarify many of your questions. Thank you. Thank you for your participation.
On behalf of B&K Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.